Did you get everything backed up?
Took care of it.
For just $59.99 a year, Carbonite backs up your irreplaceable files automatically, so you don't have to. Try it for free at Carbonite.com.
As government debt has spiraled out of control, owning physical gold and silver has become a crucial part of a balanced, conservative financial plan. At Merit Gold and Silver, we've helped tens of thousands of Americans take delivery of physical gold and silver since 1986. As demand for precious metals continues to soar, we're offering even more of our most popular bullion products at 1% over dealer cost. Are you looking for gold eagles, buffaloes, or British sovereigns? How about silver eagles, bars, or rounds? With Merit, there are no hidden fees or surcharges, just 1% over our cost for all your gold and silver bullion. We'll even pay to have your products discreetly delivered to your door, fully insured. It's easy to order. Call the number on your screen now and lock in prices over the phone, or visit us at meritgold.com. Our expert staff is standing by, so call now. Get knowledge, get value, get Merit Gold and Silver.
Well, all three major indexes closed in the red today. Take a look at that impact on your 401k. Stocks fell after mixed results from the Thanksgiving shopping weekend and more worries the Fed will soon begin scaling back. On top of all this, Nobel Prize economist Robert Shiller of Harvard warned of a possible bubble in stocks. Joining me now, Jeff Siegel, the managing editor of Wealth Daily Freedom Watch, Frank Curzio, Stansberry research editor and analyst, and Hillary Kramer, the president and CEO of A&G Capital. Jeff Siegel, I will start with you. Are we in a bubble?
Yeah, absolutely. Of course we're in a bubble. Anyone who denies we're in a bubble is fooling himself. We're seeing margin debt at record highs. Retail investors are paying way too much for stocks. There's a list of a million things you can look at, even with Shiller coming out and actually saying outright, we're in a bubble. That being said, no one can predict right now when that bubble is going to pop, and I don't think it should dissuade anyone from investing. I think there's still a lot of money to be made.
Yeah, but Jeff, if you're telling me it's a bubble, the last time we had a stock market bubble, it popped. It was ugly. Hillary, what do you say?
Yeah, well,
yes,
sure. I mean,
yes, we are in a bubble. There's no question about that. But, Jerry, we could have the next 8 to 10 weeks. We could see the bull run so hard that anybody. Why? Because there's all this money that's still sitting on the sidelines for the past 5 years. And because internationally, the U.S. is still seen as the most stable. Europe is still in trouble. Eastern Europe, look at the kind of turmoil that we've seen there. Asia, is it all lie? You know, what's going on there? The truth is the money's coming in here, and the money's coming in here into the stock market, into the U.S., as well as into our real estate market, and that's not going to change.
Frank, break the tie here. We've got a bull and a bear. What do you say?
I know. I think I'm going to be the fool here because I don't think we're close to a bubble. If you're looking at earnings, you look at the fundamentals. We're only trading at 15 times earnings. I know we come a long way and we're up 25% of the markets over the past 12 months, and 15 times may seem expensive, but you have to take into account low interest rates. We have a very low interest rate environment, plus the economy is growing north of 2%. And you're looking at past bubbles with the NASDAQ trading at 40 times earnings before that bubble burst. You're looking at the housing crisis. We saw housing prices usually historically rise by 2 to 3% annually. They actually rose 20% annually for 5 straight years before that crash. So at 15 times earnings, you got to convince me a little bit more when Intel, ExxonMobil, IBM are trading at 10 times earnings, yielding 2 to 4%.
Yeah, he's absolutely,
I need a little more convincing that this is a bubble.
You're absolutely right. Look at a company like GE. I mean, I'm absolutely on your side. General Electric, $26. This is a company that's been up there around $60 a share. There's a 2.85% dividend yield, and there's growth all over the world. Even if we're somewhat maxed out here and we have a tired consumer, there is building, and there are cranes, and anywhere I travel globally in those emerging markets, it's stronger than ever. And even in Brazil, where Professor Shiller also has a problem and thinks that there's a bubble
okay,
growing.
let me read what Shiller actually said. He said the boom in the U.S. stock market makes me most worried, also because our economy is still weak and vulnerable. The world's still very vulnerable to a bubble. Frank, you said you see troubles ahead. How is this going to evidence itself? How are we going to see this? Because it's true, retail investors are the last to jump in the pool. They're doing it now. That's going to make the markets go higher for a while. But then what starts happening after that? When does the market start correcting, in your view?
I think there's a big difference between a market that's correcting and a market that's a bubble. I mean, a correcting market could be a 5 or 10% decline, which is likely what we'll see after this huge move up. But I just think it's going to be a tremendous opportunity because you'll be able to pick up the Intels and IBMs under 10 times earnings. And I'm a big fan of Robert Shiller, and if you listened to him before 2009, you saved a lot of money. But after that, and we've all got it wrong from time to time, but if you did exactly the opposite of what he's predicted since 2010, you probably doubled or tripled your money. Again, I've got it wrong sometimes too, but the fact that he's saying a bubble based on fundamentals, I just don't see it here.
Frank, what do you say?
If I could chime in real quick, you were talking about low interest rates before, and what the Fed's doing, that's really taming that bubble. Once that ends, that's when it starts getting ugly. I don't think it's going to end anytime soon, but when it ends, that's when you're going to see the real destruction.
I want to talk a little bit about
what makes you think it's going to end?
That's the problem.
What makes you think it's going to, I know. I don't like it. I don't like what the Fed's doing, but it's hard to predict.
Before February 1st. Janet Yellen, she needs to come in. There's going to be a honeymoon period, and then maybe we could see that correction come. But everyone should realize, keep some money in the market right now because that bull's going to run, and you don't want to lose out.
All right,
I agree 100%, but you're going to get to that end of that bubble, and that's going to happen. So just be aware of that while you're making money along the way.
How do I know that's going to happen?
Well, I mean, how long can you keep doing this? How long can you keep?
I'm not arguing with you. What I'm saying is, what are the signals? As an individual investor, what am I looking for?
As an individual investor,
the bull market's too long in the tooth.
Yeah, absolutely.
I think you want to look at higher interest rates.
All right, let's move on to a different topic then. Weakest holiday sales since 2009. Here's what I'm curious about. We've talked about the consumer being tired. We've talked about the consumer being weak. Let me tell you, this expansion is 5 years old now. That seems old to me. Hillary, what do you say?
Yes, we have been recovering for quite a while, and the consumer is tired. There's no question about it. And the consumer also has a lot of goods. I mean, that's part of what's going on right now, and a lot of options and a lot of choices in terms of shopping. But right now, the consumer is still going to get out there and spend. It's just going to be online.
All right, let's go to Frank. Frank, what do you say? What do you think about the consumer?
I agree. Based on experience, my poorest bets have been betting against the U.S. consumer. I'm not saying they have money in savings they're going to spend, but they always spend, even on credit.
Right.
I mean, where the American culture is complain and buy.
You guys think it's the consumer. Jeff, what do you say?
Yeah, I mean, I agree too. I mean, look at all these people, during Black Friday, rushing to Walmart, running over people, killing people all to get, some cheap Chinese TV.
Jeff, sales were down. Sales were down.
Yeah, but we can't jump in yet. You have to look at the big picture too. We also saw right before Black Friday, you had Thanksgiving sales that could have cut into that. You also have Cyber Monday, so we're going to see the numbers from today.
Yeah, that's true.
But you also have to consider too, we're in a different time now. So the internet allows us to, buy our goods later. 3 days before the holidays, 3 days before Christmas, I'm going to go out and buy gifts because I can, and I can get them delivered in 24 hours.
All right, guys, great job. Great conversation. Thank you so much, Jeff, Frank, and Hillary. Time now for a look at stories you're clicking on tonight on FoxBusiness.com. As we just mentioned, shoppers spent less